Piece in the Wall Street Journal titled Jerome Powell's inflation fight is succeeding, raising questions about rate cuts. And specifically, this is talking about the fact that, look, we've seen the Fed trying to fight inflation for the last few years, really year and a half. And at some point, the calculus switches more over towards, hey, we're doing more harm to the economy by maintaining high rates if we slow it too much than we are if we were to cut too early and see inflation rebound. So the question that everyone's asking is, hey, when do we start to see the Fed talking seriously about cutting rates? And the interesting thing, everyone, when they're talking about this inflation fight, loves to reference Arthur Burns back in the 1970s. Because Burns famously was like, no, I want to, be aggressive in cutting, and we just had a decade of high inflation.
Yep.
So everyone points to that and says, well, this is the danger if you cut too soon, is that inflation becomes entrenched and you can't get rid of it for 10 years instead of, having it gone in 3. It's true. That's a possibility. But there's another group that you don't want to be either, and that's the ECB in 2008, which pretty much was hiking and maintaining interest rates up until the financial crisis. And then was like, oh, gee, something broke. Now what do we do?
Yeah.
And they looked pretty dumb from that, and the Eurozone, quite honestly, has never recovered.
Yeah, it was a combination of that dumb policy plus the dumb policy after the great financial crisis of austerity, let's focus on balancing the budget rather than stimulating the economy. So it was a dual impact, but yeah, I think it's fair to say that that economy has not fully recovered from, or some of those economies have not fully recovered from that period of time.
So I've heard the talk about, hey, even if there is no recession, like the Fed might just do a couple of rate cuts next year just so that, it helps things out and help. I don't buy that. Because if you do 2 cuts next year and then inflation rebounds in 2023 and 2025 because there's no recession, you look kind of dumb. It's like, okay, why'd you guys do a couple cuts just to make everyone feel good and then...
No, you look really dumb.
You look very
because
dumb.
Every comparison to Jerome Powell has been made to that, to Volcker or to anyone during that period of time who extinguished inflation. And hey, are you going to repeat those same mistakes? And so there are some mistakes that I think Jerome Powell can make and not be the laughingstock of economic history textbooks, which I don't know if he cares about or not. I think he probably has some concern about that. Cares a little bit about that. And I think that reputationally to the Fed, if they allow a recession to happen, well, then you're basically in the same category of every Fed that has had to undergo this type of thing in the past, and it will be accepted. If you allow inflation to happen again, then you've repeated the exact same mistake of 50 years ago, and I would think that you are more concerned about that one.
Which is why I think if I'm gaming out what the Fed may do, it's, hey, and I think there's a good quote here from Austin Goolsbee that just informs this. Austin Goolsbee is the Chicago Fed president right now. And I'll quote here from the Wall Street Journal. The Fed would cut simply because the economy is slowing and unemployment is rising faster than expected. If the unemployment rate starts to rise in a way consistent with past recessions, quote, we're back to our normal playbook.
That's basically looking at a Assam rule.
Yes, the Assam rule is named after Claudia Assam. We've talked about it a little bit, but the premise of it is this. If the 3-month moving average, so the 3-month average of the unemployment rate, rises 0.5 percentage point or more above that, the previous low for the 3-month moving average for the last year, then the Assam rule is triggered. And by the way, the reason this matters is that in each of the recessions for the last 75 years since World War II, the Assam rule has triggered pretty much a month or two before recession started. So when trying to figure out, hey, when is the Fed going to cut, I think this is what everyone's looking at because it's a very clear signal. Hey, the Assam rule is triggered. The Fed now has plausible cover to say we're cutting because every other time this is triggered, it's been heading into recession. Okay, this seems reasonable here.
Without that, I just don't see the premise.
otherwise, why are you trying to cut just because inflation's gone? If the economy's growing at 1.5 to 2%, and you say, hey, we could just do a cut or two, why?
And you've heard, I know people listening right now have heard us be critical of Jerome Powell of the Federal Reserve. Specifically, we think he was late to take action in 2022, especially with the Russia-Ukraine invasion and war, and mischaracterizing how that was going to impact inflation. But I don't think they've been inconsistent on this piece, and expecting them to cut without the data to back it up. Not only do I think it's the wrong thing to do, like I've thought a few things that the Fed is doing is probably not the correct path, but I don't think that the Fed would do it. And those are two separate questions, I suppose.
And yet you still have talk about this here. And again, this is from Christopher Waller, who is another Fed governor. This is his direct quote. If we see lower inflation continuing for several more months, I don't know how long that might be, 3, 4, 5 months, we might feel confident that inflation is really down, and we might just start reducing interest rates.
I guess it's possible. I'd be surprised.
I think if I were working on the Federal Reserve Open Market Committee, and I thank the Lord each and every day that I'm not. But if I were, the last thing that I would want to do is, hey, inflation's been down for a little bit. There's no recession. Why don't we just do a couple rate cuts this year, only to have to tuck tail, turn around, and start hiking next year if inflation rebounds? I would feel rather dumb. Is just how
worst possible outcome.
It would, because what's the upside to a couple rate cuts? What does that do other than make people think it's possible? Which in turn, by the way, if you think it's possible, hey, now the Fed might really start cutting rates. The long end of the curve comes down. Mortgages get cheaper. Economic activity increases, and maybe inflation rebounds.
Well, I mean, the answer is giving in to immense political and public pressure. Politicians and the public want lower rates.
Well, it depends which public you're talking to.
I know, but
because for the last 10 years, all I heard was, well, low rates are terrible for savers, and savers hate this.
I hear you. But, you I think my take is, on the margin, certainly politicians want lower rates because that means stock markets probably do well and yada, yada, yada. In this context, right, in the absence of a recession, lower rates probably boost stocks.
Yeah.
When it comes to everything else, like, hey, does anybody really want mortgage rates sitting here at 7%? No. Generally speaking, even those who already own a home or don't have a mortgage probably say, yeah, I'd like to see rates down in that 5% range and see what happens there. So I think there will be immense public pressure to lower rates, but without a recession or without signs of a genuine slowdown, I just have a very tough time justifying it.